Thank you for coming in so quickly. Please come take a seat.
Yeah, absolutely, doctor. Is there a reason you couldn't tell me what's going wrong over the phone?
Well, there's no easy way to say this, but you have a pretty advanced case of Daily Solutions podcast.
How long do I have?
Probably 9 or 10 minutes, I would say.
Welcome. This is Graham.
And this is Ashkahn.
Almost forgot there for a second.
Yes, I got it, though. I got it at the end.
All right, so today's question is...
What is it?
What is an SBA loan? Why do I keep hearing it recommended for a float center? And how is it different than a standard business loan?
Okay. I guess we should start by saying what the SBA is.
Yeah, so the SBA is the Small Business Administration. And they pretty much exist to help out small businesses as a government organization. And an SBA-backed loan or an SBA loan...
And they do, before we get into the loan, they do other stuff too, right? Like you can go to the SBA for information and consulting and stuff like that, right?
Yeah, absolutely. They provide a whole host of resources.
Yeah.
And their loans, too, are geared for small business since they are the Small Business Administration. But even within that, there's a huge variety of even loans that they offer. Micro loans, loans for equipment, loans for real estate, general small business loans. So there's a whole variety both of services and just within loans of loan services.
That they loan themselves?
Wait, can you phrase that a different
way?
That
the SBA actually loans? I mean, so we're talking about SBA-backed loans from a bank.
Yep, and so that's what these are too. I think some of their microloans they might actually fund themselves.
They might fund themselves.
Yeah.
Okay, but the rest of it is what we're going to be talking about, an SBA-backed loan.
Yeah, and so and I should also say that we're not bankers, so we've stumbled through this process, and we know a fair amount from both talking to people who have gone the route of getting SBA loans and talking to advisors in the SBA and stuff like that. So. Float-On hasn't actually received any loans or financing ever. So whenever we talk about financing, it's a little bit outside of our exact personal experience. So just take that for with a grain of Epsom salt, I guess, as we're going through this. So the SBA-backed loans is basically a lending institution, often a bank or something like that, will be actually giving out the value of the loan. And what the SBA is doing is guaranteeing the amount of that loan to the bank. So it's kind of like an intermediary default level, right? Like if you get a loan and things fall apart and you don't end up paying back the loan, rather than the bank or whoever's doing the lending not getting that money back, really who's not getting that money is the SBA. They're kind of coming in and being like, okay, well, we guaranteed this loan up to a certain amount, so we'll pay the bank the money that you were unable to pay them. And that makes lending institutions way, way more likely to lend to small businesses.
Right. I mean, it just takes out the kind of riskiness that comes with funding something that doesn't exist yet. And I think that's the basic reason why a lot of people go with SBA loans is that it's just really difficult to get a non-SBA backed loan from a bank if you're starting a business. Starting a small business, especially.
Almost impossible these days.
Yeah, it really seems like banks, I mean, by default, they're looking for like 3 years of, finances and tax returns and stuff like that. And you're like, oh, no, this doesn't exist yet. I don't have 3 years of financials to show you.
Yeah, and if you go the route of trying to talk to a lender without, trying to get a non-SBA-backed loan, you'll just hear some preposterous terms back, almost certainly. Things like you need 80% down on the loan, or that the interest payment is ridiculous, or they want the entire thing paid back within 2 years, or something really high because you're in this really high risk category.
Right.
And because you're high risk and they don't have anyone backing it, they're like, okay, well, yeah, sure. If you have 80% of the loan payment itself, then yeah, we'll give you the other 20% or something, again, a little more extreme like that.
Yeah. And so, I mean, that's why you hear about this from float centers or other businesses starting up, is that it's just by far like the most common way someone's actually managing to secure a loan. It's very difficult to do without SBA backing.
Yeah, exactly. And if you are thinking about going the SBA route, a few things to know. So the SBA has a bunch of institutions that are able to apply for SBA loans. Almost any lending institution that you go to can also, you can try to go through the SBA to get that loan. But there are some pre-approved lenders as well who, if they decide to get out a loan, they don't even need to go back to the SBA to get approval from them on granting the loan. So they're pre-approved in the sense that if they grant you a loan, that loan can automatically be an SBA-backed loan. And you'll see this for a lot of banks. Like I think things like Bank of America, Wells Fargo, Chase, things like that have historically been SBA kind of pre-approved lenders, which makes sense. They have like an extreme loan process themselves, and the SBA looks at it and they're like, okay, well, that's about what we do to vet someone, so like you're good, you know? So you can get that list of pre-approved lenders from the SBA. And they're a great resource to go to find out more information about how to increase your chances of actually succeeding in getting an SBA-backed loan and who to approach and things like that. And they'll also help you through the process. You know, like if you contact your SBA, in addition to actually backing these loans, you can talk to advisors who will take a look at your business plan, let you know if they think you should change anything, let you know if they think anything's missing and the loan process is going to go harder, things like that. So, you know, definitely take advantage of more than just their money, but making the entire road to get to it a little easier too.
Yeah.
And you got nothing else?
No, I think that sounds pretty comprehensive.
The last thing I wanted to say was the type of loan too can have an impact. So one nice thing about getting a loan with a float tank center is we do have these big, expensive pieces of equipment that tend to maintain their value over time. So having an equipment-based loan, you know, especially if you're going in with a certain amount of the money and all you need is an amount of cash equal to or less than the amount that your float tanks are costing, getting an SBA-backed equipment loan specifically is really nice. It's just another one of those things that lenders like having to fall back on. If you're unable to pay the loan, then they can always seize your equipment and sell it off. And the fact that float tanks do keep a lot of their value, you know, on the used float tank market is also a really good argument in that case for getting an equipment loan. So again, if you're already going in with a healthy amount of the money for your own build out and stuff like that, that's a really good option to look at as well. Okay, I think that's the last thing that I have.
All right, excellent.
All right, thanks for tuning in, everyone. And as always, toss your own questions up at floatanksolutions.com/podcast, and we will answer them on this very same show.
All right, thanks for listening.
I mean, not today's show, but it'd be a future.
It'd be another, yeah, we're going to have future
not the
shows.
Same show, different episode, I guess is what I was trying to say there.
All right, well, thanks for listening to that part, too.